Right, it is exactly 9:16, and we are now joined by Reezwana Sumad. I'm not sure if it's pronounced Sumad or Sumad, but you'll correct me when you come online. Assalamu alaikum to you, welcome. And of course, we're not going to be talking about really good news because we're looking at the economy, we're looking at South Africa's gross domestic product, which has contracted by 1.5% in the third quarter of the year on a quarter on quarter seasonally adjusted basis. And this, of course, is according to Stats South Africa. But all of the people in the finance world would know exactly what it means. Rizwana is here to unpack it for us, to tell us how our rand has shrunk. It means our buying power is diminishing with this type of news on that she's going to be sharing with us. Rizwana, assalamu alaikum, welcome to the program.
Walaikum salam. Jazakallah for having me.
Lovely to have you on the show. How do I say your surname?
Either way, it's fine. Sumad, Sumad is the same thing.
Okay, if you're happy, I'm happy. Not very good news for us as consumers, as citizens of South Africa, very especially with the holiday period being on us. But I guess this was expected, was it not, in light of the riots in July, the fact that we've come out of an almost 2-year lockdown. So all of these factors has played a major role, has it not?
Yeah, so the contraction in the third quarter was broadly expected. We've had the rise, obviously, disrupting business activity and consumption for about 2 weeks in July, but the broader repercussions, continued throughout the quarter, whereby consumers became very cautious, stopped really spending on discretionary goods. The consumption spending contracted in the third quarter. We also had the third wave in the third quarter, and so that also limited spending on services. Remember, it was a myriad of factors. We also had load shedding, hampering our manufacturing, mining, and agricultural industries, our secondary sector businesses. And then we had port disruptions in terms of transnet port disruptions, limiting exports. So all of those factors concentrated in the third quarter resulted in that 1.5% quarter-on-quarter decline in GDP. And what we've seen is that most industries contracted apart from financial services, which was slightly up, and personal services, which was slightly up over the quarter. It was, like I said, it was not unexpected, but I think the main focus now from a GDP perspective is what's going to happen in the fourth quarter and then, in 2022 and over in the medium term.
So obviously household spending continues to be constrained. This also by the fact that we have very high unemployment levels.
Yes.
The fuel price has gone through the roof, and the moment we have a fuel hike, it impacts on all other commodities as well. So we're not sitting in a very pretty situation at the moment, are we?
No, we're not. So one of the major reasons also for the reduction in spending in the third quarter is because of their unemployment rate. So we have the broad definition of unemployment at 46%. So essentially half of the people that can work cannot find a job. And those that are at work, some of them are underemployed. And so all of those headwinds combined with rising prices of basic items, so food, fuel, housing, electricity, all of that has crimped on the household's ability to spend. Now we know spending drives more than 60% of growth in South Africa and any other country for that matter. And so spending is vitally important for GDP growth and essentially job creation over the medium term. However, for as long as consumers are faced with these headwinds and there's lack of employment opportunities locally, and there's very weak confidence levels, so businesses are not really confident in spending in the economy because of all of these uncertainties, COVID being one of them. For those reasons, households and consumers likely to remain in a bit of a tight spot There's not just for the rest of this year, but in 2022 as well, unfortunately.
So basically, South Africans will now have to wait until March 2022 to see whether the economy managed any growth in the final quarter of the financial year. If South Africa again announces a fall in GDP, it would really mean that South Africa will enter its third recession of the current government's presidency. Well, obviously Cyril Ramaphosa's presidency. What's that going to mean to the country?
Look, for the fourth quarter, we're not expecting a contraction. Typically, what we see in the fourth quarter is we see some sort of spending coming through. Seasonal sales in November, festive season sales in December. So those factors likely to support growth in the fourth quarter, with growth expected about 2% quarter on quarter. Combined with that, we saw a sharp decline in manufactured goods production in the third quarter. So manufacturers are ramping up production in the fourth quarter to supply into this better demand in the fourth quarter, albeit still quite low. So all indications are that we're going to see some growth in the fourth quarter. But if you ask me, the bigger question is whether the pace of growth in South Africa is going to be enough to create jobs. And that is unfortunately not going to be the case for a long time, because the 2% growth rate for 2022 and beyond is not enough to create job opportunities for the youth and for most of the other adult population that are unemployed. So we need a big shift in terms of structural reforms. We need a stable electricity grid. We need business confidence to be brought back, supported by government. We need a whole host of structural reforms to create better employment opportunities in the country.
So this obviously sounds like doom and gloom. I know in other countries, governments then create artificial growth by releasing paper money into the economy so that the spending cycle can start to kind of almost rejuvenate the economy. Could that be a short-term answer for us? I do know government, in light of COVID, the lockdown, and obviously the rioting in July, especially with the lockdown, government made grants available to people who needed them, to the unemployed, etc. Did that make a difference? And is that sustainable? Is that something we can look at again?
Yeah. So the social relief of the stress grant has been extended up until March of next year. And in some respects, it probably supports the poorest in terms of providing for basic items like food, transport. However, over the medium term, it's not going to be sustainable. What will be sustainable is creating job opportunities. And we do know that government, our social grant sort of bill is one of the highest in the world as proportion to GDP. The government is already spending quite a bit in terms of its social mandate. We've got 18 million grant beneficiaries, bulk of them children. And we know that government is also considering creating a new grant, maybe a temporary grant, in 2022 to help, still help the unemployed, given our unemployment problem that we do have. So it is a temporary measure that might be supportive of states, particularly of the community, and those are jobs, but it's not a sustainable one. What will be sustainable is expanding and still expanding employment tax incentives, creating youth employment opportunities via learnerships, expanding the expanded public works program to provide skills in that area. So a whole host of employment projects need to be implemented alongside a temporary grant for us to see a sustainable difference in the livelihoods of South Africans.
Well, we hope and pray that that does come to pass. In the meantime, we will be keeping our eye on this matter. Thank you for your time this morning. That was Reezwana Sumad, a strategy research analyst at Nedbank. Assalamu alaikum to you. 9:27 exactly, still to come on the show. We are going to be talking with Ibrahim Aswad, chairperson of Soweto West Cluster, about the crime situation and what is it that the community is planning to circumvent that issue. And we're also going to see if we can try and get hold of Mohammed Baba. He was a long time friend of the late Ibrahim. Mo Sheikh, the stalwart, might come on the show a little later on. So let's see what progresses as we continue with the show this morning. Not forgetting, in the last 10 minutes, as always on a Wednesday, we talk to my colleague, and that, of course, is Inayat Wadi. He is going to be telling us what he has planned or lined up for his show this evening. So do stay with us. It is exactly 9:28, time for an ad break.
These days, I'm more health conscious than ever. So tonight, it's stir fry for dinner, cooked in healthy Helios pure sunflower cooking oil. Helios